Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, checking in on Facebook. So a lot of people like to know why things happen, and certainly a potential possibility that a buyback here to start Q1 2017 is going on. But either way, it's all speculation, and we won't know the real answer for some time where it will no longer matter. But what we do know is the bulls have changed the trend. We had a very clear lower high pattern on the daily time frame over the past 3 months, where we had a high here, 124.61, 122.98, 122.50, and I've kept pointing that out, that Facebook has been a lead bear in terms of the tech sector, and you compare it to Apple, and Apple has been so much stronger. But now that is changing in the sense that Facebook has changed this pattern. We now have a couple higher lows. That 115 support is essential going forward. And if you don't play Facebook and you're not planning on playing Facebook anytime soon, you can just write down this 115 level and know that if that support breaks, that is a clear go bearish on Facebook signal. That could happen in a month. It could happen in 2 years, but it's definitely a level to keep an eye on for the future. So the bulls are breaking out 4 extremely bullish days in a row, and we're closing above the upper Bollinger Band, and we closed above 122.50, 122.98, and we have broken this downtrend very clearly. So we have 124.61 as the next resistance, and then we have a gap to fill up here at 126.28. So if the bulls remain in control, that is our target for the short term, 126.28. The S&P 500 just hit a new all-time high, so the bulls do have momentum. And we'll be looking after 4 days. It will be normal and healthy to consolidate a little bit and establish a new higher low of support before some continuation. The weekly time frame, the bulls closed right at the middle Bollinger Band resistance of 123.60, and that is still resistance, so it's a level to be watching as well. But clearly, breaking the highs of the past 6 weeks in 1 week today, or this week, with a nice spike in bull volume. So the all-time high is up here at 133.50. We're only $10 shy, which is roughly 8 or 9%, so there is still a ways to go before that level, but overall on the long term, still maintaining higher lows on the long-term uptrend, and we are looking for the bulls to continue here on Facebook after some consolidation. Again, after 4 big bull days, we know that normal healthy consolidation is likely coming in the near-term future. So on the 5-minute chart, the bulls exploded to the upside right away, and this strength stood out against the S&P 500. If you see the SPY video I just did, it took a while for the bulls to find themselves in the morning on Friday, and we knew that because of Facebook was already strong, that if the S&P 500 bulls showed up and we got a new all-time high, that it would be just magnification for the bulls on the names that were doing well without the help of SPY. So you can see we didn't have 2 red 5-minute candlesticks in a row until 11:15 a.m., over an hour and a half into the trading day. So a very significant move to the upside, a little bit of a pullback, but the bulls remained in control until the end of the day. The hourly time frame, we can see the bulls in full control. RSI on the hourly got up to 87, so certainly pretty high. Look at the 20-period hourly support. Look at it Thursday, low of the day, bouncing right off of it. Friday, low of the day, bouncing right off of it. So we know that's a key support level going forward as well. If we lose the hourly 20-period moving average, then we'll look for that short-term healthy consolidation that I was referring to on the daily time frame. So bulls in control on Facebook, changing that trend on the daily. And again, you don't want to be playing individual names bearish. In my opinion, as a trader, trading individual names bearish when the market is at an all-time high, you might as well have that market in your favor and be looking at bullish names. And then when we consolidate in the market, you can look at the weaker names to look for some downside. But as of right now, bulls in full control of the market, and we're certainly seeing the effects here on a lot of individual names. It's very easy to find bullish chart setups with the current market conditions. So I appreciate you watching. Hope you have a great weekend, and we'll see you on Monday.